Meet Kevin. Kevin Pathrath is sitting on a tax time bomb, and it could eventually destroy him. His business, his life, it could be over, boyo. Welcome back to Strongman Personal Finance. We all know that Kevin Pathrath bought a jet for house hack because he wants to fly around and go visit sites, see real estate, blah, 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 blah. Okay, I mean, I guess if you were like Donald Trump, you may be able to justify that. We'll see if that actually works for house hack. But there's actually a tax consideration that I'd like to bring up to you guys, because Kevin in his videos talked about how he had a tax write-off. He was able to, it's called bonus depreciate. He bonus depreciated or wrote off the entire cost of this aircraft, which is 100% true. Because in 2022, you could still take 100% bonus depreciation for a asset that you place in service. It's not tax advice, by the way. If you want to do stuff like this, you need to talk to a CPA that knows your situation. But he was able to write off, at least to my understanding, at least based on what he claims, 100% of the purchase price of this aircraft. Okay, fair enough. But there's a problem. Because the IRS giveth you a depreciation bonus, and they taketh awayeth. That's right, ladies and gentlemen. Because Kevin got this benefit when he bought the aircraft. But what if he wants to sell this aircraft? What are the tax implications? Because he was able to write off $13 million of depreciation against his gross income for whatever business he had in 1 year. That's nuts. You think the IRS is going to be that generous to you? Absolutely freaking not. Let's go see exactly what I'm talking about. So, I went ahead and broke some things down for you. So here we have Kevin in his airplane. Here we have this concept called depreciation recapture. Remember, he depreciated his aircraft. We'll talk about that in a second. But I just want to show you, because a lot of people misunderstand how tax deductions or tax write-offs actually work. I want to show you exactly how Kevin has saved money on this, okay? So he bought this plane. He placed this plane into service, I'm assuming in 2022, and he paid $13 million. Now, even if you don't pay the cash for it, if you buy the asset, it's the total price of the asset. That is what your depreciable basis is. So you have this plane that he bought for $13 million, partially financed, partially paid with a down payment. He could still write off or depreciate $13 million of it. His tax savings is going to be at the 37% tax bracket. And this is very simple. Why am I saying that? Well, because Kevin is definitely in the highest tax bracket. We got to give him that benefit, okay? So, his tax benefit, because he's going to take this plane cost and he's going to deduct it against his business income as depreciation, and the tax benefit that results from that is $4.8 million. Now, that may not make sense to you, but let me show you an example. We have scenario 1, and we have scenario 2. Scenario 1 is Kevin didn't buy the jet, right? Let's say Kevin never buys this jet, and he has top-line business gross income of $50 million. Well, if he's got no depreciation, this is very simple hypothetical. If he didn't have any depreciation because he never bought the jet in the first place, his business profit would be $50 million. He's got $50 million of top-line income, zero depreciation, assuming no other expenses. He's got a business profit of $50 million. He's going to pay taxes when that flows through to his individual tax return, assuming it's a pass-through entity. His tax rate is going to be 37% roughly. His tax due is going to be $18.5 million because he's paying 37% on that 50. But if you depreciate this airplane, if you take this tax write-off, deduction, whatever people want to call it, we get to scenario 2. Now in scenario 2, old meat breath Kevin still has the same business income. See, the top line gross business income or revenue by avenue, is $50 million. However, he takes bonus depreciation. He writes off 100%. He deducts 100% of the cost of this airplane that he placed in service. His profit, after you subtract that $13 million, is now $37 million. He's then taxed at 37% on that $37 million. You like how those 37s lined up? And he has tax due of $13.6 million. And if you take the difference, oh my God, it's $4.8 million. So when somebody places a jet in service, They're not saving $13 million on taxes. They're saving the cost of the asset times the tax rate. Okay, and of course he's got to pay California taxes and blah 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 blah. So he's probably saving a little bit more than this. But that's just a brief primer. But here's the problem. Okay, there's this concept called depreciation recapture, because the IRS knows you're taking these massive deductions, right? And these deductions are lowering your taxable income by huge amounts of money. I mean, he saved $4.8 million in taxes. The IRS was so nice to him. Well, when you go ahead and sell the aircraft, you fall under, this is a business asset that's been in service for over a year in a business, in a trader business. You fall under this Section 1231, and more specifically, Section 1245 of the tax code, which says that if you sell a business asset at a gain, let's say he takes this aircraft and he sells it at a gain, any of that gain that is attributable to prior depreciation is taxed at ordinary income rates. Remember, we have capital gains, and they have good tax rates. Well, when it comes to a business asset that has had prior depreciation, just know when you sell that, this is just keeping it very simple, you're going to have to pay a higher tax rate on potentially some portion of that, because some of your gain may come from depreciation. So let me show you what's going to happen to old meat breath Kevin, okay? So here we have his tax basis. We're going to calculate what his tax basis is. His tax basis is just the residual of the cost minus the depreciation. So he paid $13 million for the aircraft. He depreciated $13 million. His tax basis is zero. So when he sells this in the future, we're going to take whatever money he gets for selling this airplane minus the tax basis, zero, and that's the gain, because he's fully written off. He's fully reaped the benefits of this aircraft. It's fully depreciated. Its basis is zero. So let's say he sells this aircraft for $8 million sometime down the road. Well, we take the sale price minus the tax basis, gives us his gain of $8 million. Now, because of Section 1245, any gain that comes from depreciation gets recaptured at ordinary tax rates, and that gain is not a capital gain, it's taxed at ordinary rates. He's going to have to pay 37% tax. So even if he has a sale and he makes money, which he really didn't, because remember, he's paying almost $18 million of payments. If he one day sells his plane at $8 million with a 37% tax rate, he's going to owe $3 million in taxes. So if this business fails, he's just stuck with this airplane. Or if he wants to sell it, he's going to get absolutely annihilated. Okay? This is the risk you got to take. So obviously, when you're really starting your own business, you need to hire a freaking CPA. And I'm sure there's a CPA consulting him and has already told him, hey, bro, obviously you can depreciate it, but if you sell it, and I think he even potentially mentioned this in a video, if you sell it, you might be subject to, depreciation recapture. And who knows what California is going to be doing with this? Because, states have different tax. You have the federal government, and then each state has its own individual taxation. It's a huge freaking pain. There's going to be a lot that goes on with him selling this jet. So he's trapped with his jet. He has to maintain it, fly it, pay the hangar fees, the pilot crew, all the maintenance, blah, 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 every year. And then if he sells it, he's faced with this choice of potentially, assuming he sells it for $8 million. I don't know. Paying 37% tax recapture on whatever sale he does. So this boy's in freaking trouble, okay? I wish him the best, but we'll see what happens. All right, hope you enjoyed the video. Don't forget to like, subscribe. And if you want to sign up for my seminar, bro, I got a balance sheet mastery seminar this Saturday, so tomorrow, from 9:30 to 11 a.m. Eastern. If you want to learn from a CPA about the balance sheet instead of some freaking clown on YouTube, go ahead and click the link in the description below. It'll be a pinned comment as well. Send me some money, and then you can attend tomorrow morning. Have a wonderful day. Cheers!